Welcome to the Mortgage Rate Weekly Market Update for the week of February 4th, 2019. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, mortgage rates did move lower last week, almost all week, but then ended the week on Friday kind of moving slightly higher. If you take a look at the bond chart on the screen, we can see mortgage bonds back on January 3rd hit their high we've not seen in a very long time, but then have sold off since then. We saw the downward trend. But then you can notice that on Monday, January 28th, it looks like we finally found a floor of support and we're able to rally off of that with the green candle. So we've stopped that short-term trend of selling off. We rallied up, and if you notice, on Thursday, January 31st, you can see that we hit the high that we saw back on January 3rd, but we returned lower. And then on Friday, after the jobs report, you can see that red candle, mortgage bonds did sell off. So rates did end the week better than they started, but we moved off of the all-time lows seen back in January 3rd that we've seen in a long time. So with that big red candle on Friday and the bonds selling off, we've got more room to the downside. Stocks are feeling good momentum. We're going to recommend locking in your mortgage rate to start the week. Looks like the downward trend could be resuming for bonds, which is an upward trend for rates. So go ahead, lock in to start the week with your mortgage rate. Now, if we dig into the economic news, the big news last week was the jobs report for January 2019. It was a huge surprise. It showed a whopping 304,000 jobs created, which was almost double the expectations of 160,000. We did see the unemployment rate tick up from 3.9 to 4%, which seems strange sometimes when you have a huge jobs number, but the unemployment rate is derived from a different survey than the jobs report number. So in that survey, it showed some people left the workforce. We didn't create as many jobs, so the unemployment rate did tick up. So two different reports, one for the headline jobs of 304,000, a different one for the unemployment rate, so that's why it did tick up 3.9 to 4%. Now, the big news in the report, which hurt mortgage bonds, was the average weekly earnings increased, the rate of increase from 3.2 to 3.5%. That's a significant increase. This would cause wage pressure, inflation, which is bad news for mortgage bonds. That's why they sold off on Friday. So a good jobs report. Stock market liked it. Bond market did not like the weekly average earnings. Then we saw weekly initial jobless claims come out on Thursday, and huge surprise there. Claims surged higher by 53,000 claims to 253,000 claims for the week. You can see we had a dip down last week because of the MLK holiday. And also the government shutdown might have been factoring in, but then the MLK, they didn't file it. So then we saw the huge, everything kind of comes in, 253,000 claims there. That's big. We'll have to see if that was an anomaly or if this is a trend that could continue. If it is a trend that could continue, that would be bad news, but we think it's all from the government shutdown. So now that the government's back open, at least temporarily, we should hopefully see jobless claims start to trend lower. So we'll keep an eye on that. Now, housing news, a bunch of reports there. We saw pending home sales for December 2018 drop 2.2% on the index to 99 from 101.2. That was worse than expectations. They were expecting an increase of 0.5%. Now, pending home sales are actually down 9.8% year over year. Now, the National Association of Realtors chief economist Lawrence Yun said he's confident the housing market will see improvement in 2019, and he thinks the long-term growth potential for housing is high. So we had a short bit, housing market slowed, did not go backward, but it slowed when the rates kind of moved up. We do have low inventory, so rates have kind of rebalanced and come back down some. The demand is still going to be there, so we're looking for a very strong spring market. So if you're looking to buy a home, you need to get pre-approved and get out looking now before the spring market kicks in. Now, new home sales for November 2018, they were delayed in being released because of the government shutdown. So they were finally released, and they surged higher by 17% to 675,000 units on an annualized basis. However, new home sales are actually down 7.7% from November 2017. So great month, but we're still down year over year on new home sales. We're not building enough homes to support the demand in some areas of the country, so we'll have to see if the home builders can pick up their construction. Now, existing home sales for December 2018 dropped 6.4% to 4.99 million units on an annualized basis, and it was below expectations of 5.22 million units. So lower sales in December were due in part to higher mortgage rates in early December, along with the ease in buyers due to the holiday season. So we had mortgage rates tick up. We have the holiday season, which is not typically a buying season. So that is what we would expect for existing home sales to kind of drop. So hopefully we'll see them tick up in January and February. We'll keep you updated on that. Now, existing home sales are down 10.3% year over year. And again, that's because we've had low inventory all year. The monthly inventory for existing home sales is 3.7 months supply. That's very low. Normal housing market is a 6-month supply. So it's not that we don't have the buyers, it's just we don't have the inventory is the biggest push. Now, if we dig into the local news, we've got a free first-time homebuyer seminar coming up Saturday, February 16th in Newark, Delaware at the Christiana Hilton Hotel. And then we're back in Wilmington, Delaware on Wednesday, February 20th from 6 p.m. to 8 p.m. at the Independence Mall eXp Realty office. You can register for either one of those events by giving us a call, 302-703-0727, or online, www.delawarehomebuyerseminar.com. And then we're back in Maryland on Saturday, February 23rd from 10 a.m. to noon at Hyattsville, Maryland. You can register for that one at 410-412-3319 or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.